Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's another fun-filled day, TGIM. Thank goodness it's Monday. And just as... Where's that mouse at? There it is right there. And just as we are looking at, the markets, stock markets are feeling some pain. There's some concern. Tech 100 is down 321 points. Dow Jones Industrial Average down like 500. And heading over into the Forex arena, the dollar index is lift. Oh, where is it at? There it is right there. And then over in the dollar index. Oh, yeah, and there's Bitcoin. I wanted to mention that. It's fallen down, as I said last week, into the fair value range between the 19,000 and 23,000 area. It's trading at 24,000 now. Had gotten down to, I think, a little bit lower than that. Let's see if we can put that up on the other screen, too, at the same time so we can see the exact wiggle and squiggle and so forth. Let's see, where's it at? Right. There's the dollar index up there. You see it's lifting. Let's put it up, the Mr. and Mrs. Bitcoin. Right. There it is right there. 10 weeks now in a sell. Let's see if we can widen this out a little bit more, like so. And so, just coming down to the end, they'll be buying the rumor soon. Sooner or later, that rumor will be coming in. And right now, it's just like they're just mechanical issues are forcing liquidations in certain areas, that type of thing. As you can see right there, Bitcoin today's low is 23,410. So right at the bottom. The top end of that low end of the range, I really see us in that fair value now. I think that's that 25,000 to me was the beginning of being at fair value, and they lifted it back up to, where did they get up to? They got it back up to 30,000 a couple days ago. Right up in here, you can see on the 7th of June, they had it up to 31,570. Then we slid into this sell again the next day, and now it's finally pushed. I guess Friday it settled at 28,000 or so, almost 29,000, and then today they've pushed it down into the 23s, which is, like I said, this is the fair value area for cryptos as far as I'm concerned. I'd be surprised if we challenged, as I said last week, I'd be surprised if we challenged the 19 or 20, but that is probably the worst of it. So if you're into the cryptos, start now is time to start nibbling. As we've been in that weekly sell now 10 whole weeks. I guess you can, let's see if we can show you that. Oh, let me check the chat line too. I'm so excited. There's so much fun out there today. Everything's doing what it's supposed to do. That's what makes it so much fun. That's how Doc can do these webinars. If I couldn't give you that good of information, I wouldn't be able to do the webinars. It'd be a kind of a drag, Oh, there we go. There's Robin. Hey, Robin. Hey, there's Janos. There is, let's kill that volume, too.
Oh, there we go. There's Robin. Hey, Robin. Hey, there's Janos.
Where's that volume at? There we go. There we go. Yeah, you can hear the volume in there. There is, and then there's Metho 2000 and Q Entrepreneurship. And so we're real happy to see everything move the way they're supposed to move. And that's the most important thing of all, is that, just seeing the markets, if we're like 8.5 out of 10 times accurate, I guess you can say. I guess that's the best way to describe it. So, I'm always just happy that it works. I have to laugh on that one. I'm just happy it works, I'm glad 40 some odd years of this, 5 decades. I'm just glad it still keeps on working. It keeps on. What's that? Remember those watch commercials where they say, and it keeps on ticking. I forget who it was. Was it Timex? I think it was Timex, and they would say, and it keeps on ticking. And that's the way we look at it here. And the market keeps on doing what our math tells us it's going to do, and it does it. Every so often you get a little bouncy in a twisted direction here or there. We get into, daily sells for weeks, and then finally the weekly joins in, and next thing you know, it finds a bottom, and then they go back into the buy again, and you scratch your head and say, well, it didn't give me that opportunity. One thing it did, it told you not to be long. That's the key right there. If you got a daily signal on the sell side and a weekly buy, sometimes that market just doesn't know what it wants to do. And thank goodness the math picks it up, What are the expectations for the U.S. stocks today? Well, right now, it was down almost 600 plus points. Let's go over to the stock market and take a look. Slide it over onto, there's J4X. Let's see what it looks like there. We'll start off with the S&P 500. And you can see there, on the J4X, you can see that pressure. See the green line underneath, most of the time, underneath the dashed line. So that pressure has been on for a bunch of days. It was going sideways in here. We talked about that. Where the markets are kind of gone into that lazy mode. Like, I don't know what I want to do. Now, the last 3 days, we've been in the daily sell. And we went into the weekly sell just last week. And it did that big plateau thing right there. And now we're going after this low in here, the 3,800. I kind of didn't think we were going to... I thought this would be the lowish area here. I really thought we would stall out somewhere around... Top Gun... What did they do this weekend? Did they do another 143 million? Wow. The Financial Channel is saying Top Gun, new king of the box office. Top Gun. Oh, no, it was Jurassic World Dominion. People are like walking their dinosaurs and stuff like that. That's what it is. And beat Top Gun. Okay. All right, so you can see here we're seeing that weakness in the stock market. And, you can see the last time we saw this area, was back in May, which is not that long ago, just like 3 weeks ago. And then when we go and look at it, way out there, the last time we saw this, that is June of 2021, we got into, what's that low there? That low is 41. So it's been a while. It's good. Let's take a look at it on J4X. I'll give you a whole page of J4X. Let's see what it shows there with the hinkies. Look at that. Not since probably the crash of 2000, right? Yeah. No, that's not the crash of 2000. Where's the crash of 2000? There it is. There's the crash of 2000 right there. So, the thing got down to 2,270, basically. What's the low there? 22. So, not since the crash of 2020. I know no one else talks about the crash of 2020 besides me. But there's the crash of 2020. So, maybe it'll play with the top. I think that's what we kind of... When we played with this last week or the week before and I started talking about the crash of 2020, the top was 3,200 on the S&Ps. So, they could go after that. If they really get paranoid around here, anything's possible. I really think that we're in that fair value range. I really thought we were not fair value in the cryptos fair value, but I really thought that the stocks would kind of not break the range. But what was it this weekend? Oh, I know what it is. They're not going to. I can see taking back that concept. I like that little rebound. I could see that if they raise. See, I don't think that they were going to. The markets were telling us, okay, that they weren't going to raise rates past the 3.5 area, and now they've got the 30-year trading at 326. I think it's a 30-year. Let me just double check. Or is it the 10-year? I know that they've gone contango. The back months are lower and the front months are higher. So that's a sign of inflation. Let's see, where is it at? So we're getting that contango going on. Let me tell you what the bond market's saying now. I know that it popped on Friday. And so, let's see, right there. And then I go to markets and go to bonds. And so this morning, the 30-year is yielding 329. Okay, yeah, the contango has started. Okay. So the 20-year is yielding 355. And the 10-year is yielding 326. So the contango is really pushing. They're starting to project a higher. I didn't really think the Fed had the nerve to push it beyond 3.5, but we're already looking at the 20-year trading at 3.55, almost 5.6, and the 10-year is yielding 3.26, and the 30-year is yielding 3.29. So, look at that. The 7-year is yielding 3.34, and the 5-year is yielding 3.36. The 3 years at 3.35, and so even the 2-year is yielding 3.17. Let's see what Europe is doing. The gilts, the 30-year in England is yielding 2.56. I'm sorry, 2.56, and the 10-year is yielding 2.45. So there's no contango there. Germany is reflecting. Okay, they're doing it in Germany now. No, they're not. The 30-year is yielding 1.68, and the 20-year is yielding 1.67, and then the 10-year is yielding 1.56. So where's the short rates in Germany? And the end result is the contango has flipped. So I guess the Federal Reserve is in a panic mode. I guess they don't have much of a choice. They've got to do something. So that's the expectations. Is that my expectation was we weren't going to get past 3.5. So if they're gonna show higher numbers, in other words, interest rates are going to rise into the 4s, then our lackadaisical triangle go nowhere summer doldrums is going to disappear, and they're going to put more pressure on the equity market. So to sell the continuous, well, as long as we're in a daily sell, I guess we need. I talked about it. I recommended 2 weeks ago. You need to be in collars. So in other words, you sell the call, and you buy the put with the money you got from the call, and you don't really have to worry. I did a webinar, didn't I say collars or something like that? Or I know I talked about it. I think, didn't I label it like invest? I know it was like 3 weeks ago. I said invest like it's not 1975. Didn't I do it that way? I think I did something like that. In other words, I'm always complaining that people don't use binaries and they don't use options enough. They invest instead like they think it's 1975, where we only go up or down 1.5% or 2% for a year. I mean, now we do 1.5%, 2% in a day. Means collars. You got to have collars on. For anybody out there, that are getting nervous now, don't sell your equity. I said it last week even. I said don't sell your equity because you'll incur tax for capital gains. I said that last week in the webinars. You got to sell the collars. So put a collar on. So you sell the call 6 months out. You buy the put with the premium you took in from the call, and your portfolios, you go on vacation, not have to worry about anything. It's all free money there. So binaries take a separate account for a trader. Yeah, well, let's see. Duke traders can only open a long and short with stops at distances. Yeah, that's exactly what you need to do, is lock those distances and make sure that you're not. Well, we keep on drifting down. That's the only way to go at it at this point. But overall, you got capital gains. Taxation. If you sell your portfolios out, you get trapped in paying for all those gains over the years. So you got to do the options against it. That's the way to protect yourself. Yeah, exactly. Yeah, we're not just talking about America. We're talking about the whole world. You got to invest like it's 1975. So you can use the binaries on a day-to-day basis, or for like Dukascopy when you have a Dukascopy account, because it's like intraday trading makes it easier. You don't get stopped out so ugly, and then you lose your opportunity. But yeah, so the overall is where we left off last week, except for the fact that now we're breaking the bottom. I really thought that we were going to be in a lackadaisical market, a summer market where it just sits there and does nothing. Bounces in between the when I mean nothing, it does nothing but go sideways and chop. 500 points down a couple days in a row. That's pressure. That's real pressure on a market, Let's just go. It still doesn't look like the crash of 2020, though. Yeah, I mean, look at that. That's now, and we're playing with the low of May. But I don't know. Maybe we're going to get another one of these falls. Maybe they're going to do that. I kind of think that the Fed is going to... See, no one can really control the Fed. I mean, besides the politicians. The politicians are the ones that control the Fed. So, they're going to put some pressure on them to look like... Let me just give you an example. I was saying to Robin about this on the phone no more than that's why I was a little late. Would you believe that every major network, the old line media network, on Sunday, they have all those Sunday talk shows, and no one talked about the assassination of the attempted assassination of the Supreme Court Justice. Nobody. So it's only out there in the internet, on the new media, but not one major, not ABC, not Reuters, not Dow Jones. I mean, Dow Jones talked about it. Not Bloomberg, not CBS, not ABC, not NPR, not even BBC. None of those networks talked about the assassination. Not like 2 minutes. I'm talking about nothing, zero, no seconds dedicated to the attempted assassination of the. So if they can't even get an assassination attempt by the largest, most powerful body in the United States, the Supreme Court, then how do we control the Federal Reserve? I mean, there's no way that the public can control the Federal Reserve. The politicians control it, and so even when they say that they're not buying, they're going to be buying. They can't even audit them. Republicans tried to audit. Even the Republicans tried to audit the Federal Reserve under Trump, and they couldn't get it. They couldn't get it done. Okay? So, in other words, the Democrats control the Federal Reserve, and they're not. Look at Mrs. Yellen. Mrs. Yellen, who was a Fed chair, is now our Secretary of Treasurer, our Minister of Finance for those in parliamentary systems. And she's out there talking about woke, and they're talking about temporary inflation for the last 12 months. So there's no controlling them. They're just going to beat the same drum over and over again. They're just going to sing the same song over and over again. So the bonds, that's why they call them the bond vigilantes, is because they won't react to the Democrats. They go and follow the markets. And right now they've gone contango, as we call it here in the States. And so what's happening is that front month bonds, earlier bonds, 5-year, 3-year, 10-year, things like that, 7-year, are all higher than the 30-year bonds. And you're seeing it start to bleed into Europe. You've seen in the German market and the British market, they're all doing that. And there must be, let me look and see if I get the bond quotes for the EU. I got Canada, Australia, Japan, Italy, Germany, UK, and treasurers. Let's see if under treasurers they give it. They're not even giving me quotes on the European Union. They hide them so well that they won't even reflect them. But there's got to be European bonds somewhere. But they're hiding them. So, Giannis, if you can see them, let's see if we can find one on the Dukascopy. There must be European bonds somewhere. Let's see. There is the U.S. bond. There's the Boone right there. And that baby's been dropping from the 175s. Look at that. All the way down to the 145s. And I don't even know what that is. Is that a 10-year Boone? Oh, that's a German Boone. That's not even a European. It's just in euros. Are there European bonds? There's got to be European bonds. They're always borrowing money. What did Draghi purchase? He must have been purchasing something that was part of the European Union. So they'll more than likely, just Boons. Is that it? So it's just German Boons and no European bonds. I thought they had European bonds. I mean, we don't reflect them here. So, but we have contangos going on. And Europe's starting to go contango. Let's see how, you know what, let's take a look at Japan. I always say Japan is like a leader. Let's see what Japan's looking like. Let's see, where's it at? Right there. I have Italian bonds, I have French bonds. Let's see, right there. Their 30-year, all right, where's the contango there? So their 30-month is still a minus. Their 2-year is a minus. Their 3-year is a minus. And their 5-year is a plus. So they're paying almost 4/10 of 1%. They're playing in their 10-year is 3/10 of 1%. Their 15-year is almost 7/10 of 1%. Their 20-year is 9/10, and their 30-year is 1.25%. Let's see what France is doing. France. Oh yeah, they're contangoing, I think. No, they're not contangoing. So just starting off with the five. Well, they're all the 1 year is at a 0.5 percentage point, and then the 3 years at 1.5, 1.4, 1.6 on the 4 year, 5 year 1.7, almost 8. The 6 year at 1.8. Oh, there you go. That's where it's starting to contango. 6 year is 1.84, and 7 year is 1.88. But it's still not a contango. They're still higher and higher as you go for. Yeah, they're all out there at the 30 year, 2.55. Let's see. When I went to Germany, they only showed us 3. See if I can get a better quote. There we are. There's the 1 year. So the German is 0.38, the 1 year, and the 2 year is 1.1, and then they follow the scale 1.2, 1.3, 1.4 each year going out. 5 and 6 start to get close to contango. Yeah, no real contango. So, anyhow, yeah. Now that I'm not too confident that they may raise rates to like 3.5, 4, a little beyond what I was expecting. But I'm not convinced that the Fed is going to walk away as much as they claim they're going to walk away. So, in other words, they'll be buying them in the aftermarket somewhere, keeping the prices up. You know, in other words, they'll. I mean, there's an election coming up. They can't afford to have people frustrated with them on gas, on food, and now on their retirement fund. That will freak a lot of people out. They're going to start punishing these D's even more. We'll see. I'm just not that confident that the Fed will do the right thing. So, all right, that was a sip of the coffee. From there, let's take a look. Let's go over to currencies now. But yeah, my idea of the summer months could get a little squeezed, and we might go below the range. You know, see it there? It's trying right now. Let me just slide over again. See what the low is today. Today's low is okay. The low is 3798. So did they take out this low of May 20th? Yeah, they did. No, yes, they did. They did. 3810. So they did. They took it out. So we are now below, and I didn't think they were going to. I really thought that they would cheat their way along. They'll be out there buying. They'll perk it up a little bit. Maybe instead, can you imagine if they start to chase after the crash of 2020? Most people don't even realize there was a crash of 2020. Let's see. All right, now let's go over to the currencies, see what they're doing this morning. Besides, there's the dollar index, rocketing towards the top. Let's take a look at it over on J4X. Oh, you can't see that. There we go. Dollar index, right there. Dollar, King Dollar. I'm just going to make it big for a second. There it is. You can see it from there. Going up towards the top again. That thing's been happy. Been climbing from here. It's been started climbing right from there. Then climbed again and start climbing again here. So it's doing it. It's doing what it's supposed to do. That's the one thing I'm always happy about. Makes me happy just to see the math always working. All right. From there, let's go over and take a look at the Swiss franc, and then we'll take a look at the euro. See what that's going on. There's the Swissy. Swiss has been marching up. See what it looks like over here. There we go. There's a Swiss. I don't know. We'll see what they do with that. See if they really do go after that. I kind of thought they wouldn't. I thought they would kind of find a way to go back down and hang out around in here, but we'll see. Again, the Federal Reserve will do what it wants to do, and that is follow what Mrs. Yellen and the rest of the, Mr. Biden says. Finance their policies. There's the euro. You see there, euro is pressing down. A little surprised. I really thought the euro was going to try to take off. I just had more faith that the lizard people of the Federal Reserve were going to do their thing. You can see here, it closed in a weekly sell right there. And now, more than likely, it's okay, so that's why we have it like that. It's already bouncing back up again. I just don't have any confidence that they're going to let the market sell down. Remember, the Federal Reserve controls everything. They can, can you imagine? I've mentioned this in webinars. What's it? Citadel, one of the top hedge funds, gets over $2 billion a night for free. So what reason does Citadel have to play the short side hard? They don't have much of a reason. And everybody else is the same way. These banks and all, they're getting billions of dollars overnight for free. So, mother's milk of equities is earnings. And if the earnings get washed out, then there's problems. So if the Federal Reserve allows overnight window to lend like that, well, then you're going to have, buyers constantly in the marketplace. But as long as the bond vigilantes keep on pushing hard, they will lower the range. That's what they'll do on me. So Doc will be wrong, and the range will become lower, and so it won't be a sideways channel anymore. It'll be some type of a leaky market, and that's why I said a couple weeks ago you want to have your collars on. So for global traders in general, in every country, I would still have collars on now. I just go out the further away you are in being minus on your portfolio, your retirement portfolio. Expand. Put it out 8 months. Get bigger premiums. Sell the calls with bigger premiums. Take that money, buy puts with it, and you don't have to worry if they have another crash of 2020. If they take 33% out of the market like they did in 2020, we'll be there waiting for the V bottom. You can go back and look at our webinars. Janos can admit it, and Rob and everybody else admits it. We called that V bottom in March of 2020, and it was a V bottom. I beat that drum. I kept on saying in our webinars and labeling them V bottom, V bottom, V bottom, and it was a V bottom. The math was screaming it from the rooftop. So, we'll catch it. It won't surprise us. Maybe just a little. Maybe the bond vigilantes will do something to try to twist us a little bit. But overall, in the end result, the math will pick it up. All right. From the euro, let's see what Mr. and Mrs. Cable is doing this morning. And all the little cables around the world. Yeah, look at that. That's been a real punch in the face. Really disappointed there. They tried to get it into the weekly buy last week and just failed. It just missed it by the hair. Look at that. Minus 0.000 4 zeros. 0.02. Just missed that weekly by the hair of its chinny chin chin. And then they've taken this poor thing from a daily sell from 125 now to 121.9. We are in a very fascinating marketplace. Some of the older traders beyond Robin and I, Robin and I both talked to older traders. In some ways, we were kids on the floor, really, in our 20s and 30s, compared to some of them who had been in the business and they were in their 40s and 50s. They're amazed I know that I hear from people every day. They're amazed to see the markets move like this. But it is what it is. We just trade it. What do they say in the poker game? Something about you play the cards you were dealt. In this case here, collars. When in doubt, and you're nervous about your portfolio, go sell a 5 or 6 month collar on the call side and buy the put. Do the collar, and you'll be a happy camper because you'll lose 1 or 2% at worst, and the markets will lose 15, 20, or 30%, and you'll have money to dollar cost average into your portfolio. That's the best part about it all. You'll take all that put money and you can dollar cost average back into it and put new collars on. All right, from there we go over to the Turkish lira. I was really surprised. Erdogan is doing so much pressure on his own economy again. I really am surprised. There's the euro, and it traded as high as almost 18.6 last week, and we're trading now at 18. Where's that at? 18.16, 18.11. So there's a lot of pressure on that. We're still in that weekly buy right there. Let's see what it looks like on J4X. Boy, he had the right idea. I got a sneaking suspicion he is not paying those puts. In other words, they promised to give free puts out to everybody, but I guess when it came down to it, I guess he's not doing it because the money has moved out the door. So I guess no one will say it too loud, but I'm just guessing that he stopped or never paid those puts, so he invented it maybe? Because I'm not seeing any writing whatsoever about those free puts. And I don't understand why anybody would even sell the Turkish lira unless maybe what he's done is this. This is a wild guess. He's giving the free puts out, and then he's probably charging them for new taxes. It's probably something like that. So they're losing the gain from the free puts, and so they're walking away from it all. That's the only thing that makes sense to me. Because if you have free puts, why would you sell the currency? Right? I mean, why move your money around? Why be liable for taxation? Right? And taxes are just as important as everything else. There's a really good book out about the damage of taxes by Steve. What is his last name? I can't think of his name at the moment, but him and what's his name? Steve Forbes and Arthur Laffer from the Reagan years and what Mr. Trump did, following the Laffer curve. They talk about how bad taxes are and how they don't do what they're supposed to do. In other words, the political spectrum that says taxes are good to make everything equal with everybody, in fact, doesn't do that at all. But there's a book they've wrote. I think they're just getting ready to publish it, and I'm guessing that that's what's happening with the Turkish lira. He gave out the free puts. I'll show you where he did that. Right here. He declared that they were going to give out puts to everybody who owns the currency, and it drove it down nicely, a 50% haircut. They took it out from 21 down to like 11 and change. What's that? 1160 from 2074. So it was like a 46% drop in a couple day period. And I'm just guessing he's giving them the put money because I'm not reading anything that says that they're not paying for the puts, but he's probably taxing them somewhere along the line somewhere else. And so they've decided to walk. That's why it's gone from, what's that, 15.5 up to 18.6. It's not 45%, but what they're doing is they're walking away from the currency slowly. So he's doing something against those puts. In other words, he's not willing to go. See, I thought, this is my opinion of it all. I thought he was going to give those puts out, and then they would tax the population. They just add another tax through the finance ministry, and so that the population would pay for giving the free puts out, which kind of makes sense, and that would keep the currency stable, which would give growth to the economy. But if you add new taxes, then it changes the whole story, because then the puts don't make any profits for you, and then you lose money on your purchase of the Turkish lira, and then you're being taxed, and you're not getting. The thing is, you're not getting growth. The trick was to get growth, so you could afford to tax the population, but not tax the investors. I bet he's taxing the investors. That's what I bet he's doing. That would make sense. He's finding a way to tax them, or he's forcing them to be invested X amount of period, or they're only allowed to invest. He's doing something wrong. Let's put it that way. That's what's going on there. All right. From the Turkish lira, we'll go over to the Canadian and see what the Canadian's doing. Now, oil is down a little bit today, so I would expect to see the Canadian dollar losing a little bit against the American dollar. And that's what it's doing. It's lifting up. Let's put it up over here. There's a Canadian dollar. You know, you can see it's up for a third day now in a buy, and it closed in a weekly buy last week. Did it close in a weekly buy? No, it's not in a weekly buy. It's still not in a weekly buy. It's missing it. So it's still minus there and there. So, you know, the only good clear signal was this one, long sell, and a daily classic, and just missing that spot right there by, look at that, 0. Is that 4 zeros or 5 zeros? 1, 2, 4 zeros and a 5. Missed going into the weekly sell. That would have been great. You would have caught that whole ride. Instead, you just get some little stuff like that, and it goes back into the buy here. You can't be short. So maybe it'll follow the oil market like it normally does and go like that and start heading back down again. Now let's go over to the oil market, and there is the front month. You know, it's pressuring into a daily sell today. Still in that weekly buy. Hard to believe that the oil market will back off much. And then let's take a look at gold. And there's gold. Whoa! Boy, they're taking away all that win on Friday away from it. They're beating it up. Still has some. Well, it's below. Okay, so on Thursday it closed at 1852. Let's go over to J4X and look at the gold market. There it is right there. So let me just double check something too on here. I just want to go look at another charting system just to look at the gold. There it is. And gold, let me just double check that day. So that's August gold. Yeah, that fits. Okay. So it closed on Thursday at the where was it? Thursday it closed at 1852. 52.8 it says there. See it there? C right there with the C 1852 open, high, low, close. And then 1852, and now we're trading at 1844. So we're below that nice big bounce. Now we are flirting with a weekly buy still though. So that's cool. I saw silver where it's getting crushed. Just amazing. From there, we'll go over to the South African Rand. So I'd imagine the Rand is moving up today. It's losing against the dollar. Right there. Yeah. See that strength right there? And they correlate a lot. You know, the Rand with gold, Canadian with oil, they both correlate with those products. And let's look at it there. Let's see, where's it at? There we are. Let's see, where's the South African Rand? There it is. Yeah, South African Rand is just moving up. You know, losing that. Look at Friday. It did not respect that rally whatsoever. I remember saying something about that in the beginning of the morning, but we didn't remember. It was like right around here. It wasn't really going anywhere on Friday. It was kind of quiet, you know. And then I wonder if I can find you a picture of what we sent out to clients on Friday morning. Let me see. I can do that. Let me do that. I'll show you the chart just to give you a flavor. Did I do that? No, I didn't mean to do that. There we are. There it is right there. Let me go in and look at Friday morning cents and see if I can pull up a gold chart just to give you that example how it was. There's Friday afternoon. There's it's Wednesday, Thursday, Friday morning. There's Friday morning. Okay. Now let me find a gold. There's one right there. There it comes. Right there. Yeah, Friday morning, it was showing, weakness. We hadn't even gotten going at Friday morning. Showing weakness. We were in the sell. And then, then instantly it just, it took off in the afternoon. It flipped around. I remember Robin saying something to me about that. He called me and said, "Hey, look at that. It's flipping around." And the South African Rand probably did the same exact thing. It just gave up the ghost. No, it didn't give up the ghost. What am I saying? It's the opposite. South African Rand didn't care. Because, you got to look at that. Look at that move there. And then you can see right here on gold. Right there. It didn't care that there was strength in it. Not whatsoever. And there it is. There's the Friday move. All right. From there, we go over to the yen. Let's see what the yen's up to. There's the yen. Flirting with that 35 area now for 3 days. When I went into the buy, we talked about that 35 area. You can see here, now it's flirting with a little sell here right now, but still in a weekly buy for a couple of weeks. So awful hard to want to try to play the short side. Unless you're doing it through binaries, be careful, traders. Binaries, it's safe to do it, but I wouldn't do it any other way. Oh, yeah. So, from there, we go over to, where do we go from there? We go to the Mexican peso, which I thought was kind of interesting. They were putting some type of strength into the peso last week at the end. Or no, they were selling it, basically. Yeah, they were selling it because it went into the buy there and went up. That was Friday's move. So they're anticipating higher rates across the board here in the States, without a doubt. And that is really the story at this point. All right. Now, wow, that's a heck of a move. Look at it. It's going after the point. Was that the 0.23? There's the 0.38. There's the 0.50. They've really roared out of that, being underneath the range. They didn't stop right there. They just kept on going. So they must be really interpreting the bond market like I do. They're looking at it and they're saying, "Oh my goodness." But I'm not, like I said, I'm not totally convinced that the Federal Reserve is going to, do what it's supposed to do. They will raise the rates. Maybe they'll do 3/4 of a point, try to calm everybody down. But will they stop purchasing? In other words, isn't it kind of like the classic? What do they say? Taking from Peter to pay Paul, or what's that other one they do? Taking money out of your left pocket to put in your right pocket. Now, will the Federal Reserve really stop buying bonds in the aftermarkets? I don't believe it. I just don't believe it. Not with 4.5, 5 months to an election. I don't believe it. I mean, I can't tell you how many people have told me how stunned they are about Mrs. Yellen. I'm like, are you kidding me? She raised the percentage, 1/4 percentage point during all 8 years of Mr. Obama, and it was when Mr. Trump got elected. So before he was even sworn in, they raised it 1/4 percentage point on him. He was elected, and it's such a political machine at this point, the Federal Reserve. All right, that's why I think gold and metals are going to do really well going into 2023, because I think that the Democrats are not going to have the power to abuse the Federal Reserve anymore. All right, from there we go over to, where do we go there? We go to the metals. Let's go check out the metals. Let's take a look at silver. Let's see what silver's doing. Right there's silver. It don't care. And it's not even, look at it, it's been in a weekly sell since April 16th. It doesn't care. See that right there, April 16th, since that 26 top thing going on. And they brought it down to, what's that low there? That low is 20.5 basically, 20.56 to be exact. And it doesn't, they don't really care. And every sell has been I think almost every sell has been a winning winner. That was a very poor one, but it was a winner. Closed there, opened down there. You had a chance to put a stop in and lock in the win. Same thing here. No, there you go. There's a loss. There's a loss right there. And then you had that massive long sell signal on weekly and daily from 26 and change, 23 all the way down to 20.5. So you had a sell all the way down to, what's that, $5? 20.5 at 26.25. So it was like almost 5.5 points, $5.50 win on one trade. Let's see, what do we have from there? Let's take a look at copper this morning. There's copper making new lows. We're seeing the pressure there. And you can see the weekly is flirting again right there, minus right there. Let's see what silver looks like before we go to copper on J4X. Underneath, pressure galore. Just this constant, slow, steady burn, Lots of pressure. It looks to me that the market will all open at vital round support levels. That would make sense. I was explaining to Robin this morning about the bankruptcy prices. Revlon declared bankruptcy, or is getting ready to declare bankruptcy, so it was underneath the $3 area. I can't tell you, I must have had 3 old heads that have been in the markets like 60, 65 years. One of them was on a committee with Bernie Madoff, because he was a chairman of an exchange and Bernie was a chairman of an exchange. So he actually would have to deal with Bernie like every couple months. The chairmans would get together and in some type of exchange thing, where they had meetings about different products and so forth. And he was really close to Bernie's brother, and he would say to Bernie's brother, "It's like, what the hell's Bernie doing? I don't understand how he's doing the options," because he was a chairman of the stock and options exchange. So it'd be like, "What's Bernie doing? I don't understand it. Is he front running people?" No one would listen. Oh, a lot of us told the Securities Exchange Commission they didn't want to hear it. They just refused to listen. But anyway, the end result is that they were sending me stuff over the last couple of days, like talking about this contango situation and Revlon going bankrupt. And I was Robin follows this one product, ATAI. It's a Kathy Woods fund, and they always go to the round numbers. They do that, Giannis. The equity guys have that tendency to go to round numbers, and so I was saying to Robin, the first one was $3. That's what in the equity markets we refer to it as bankruptcy price, $3, and then it bounces off of it, and it did. It went from like $3 back up to like 4.25. So it had a really good bounce. And now I guess it's let's see, where's it at this morning? Where's it at? It's right there. So yeah, they have that natural tendency to go to round numbers. It's kind of like the way they price gasoline in the United States. Yeah, so it went to here. It went to 305. Okay, so it just about touched the bankruptcy number, and then it ran to 429, and then they put a high out there of almost 446. Robin's been looking to buy that when we get into a weekly, but we've been in a weekly sell on that product since March 25th. From the $5.50 area, we've been in there, and it went down. What's that? To $3 from $5. It's at a 40% drop, and so it's still in that weekly sell. So it went into the buy on Thursday, went into a sell on Friday, and we're in a weekly sell. And now it's trading at 311 at the moment as we speak. That's Kathy Woods. It's always easy to be a bull in a bull market, but it's very hard to be a bull in a bear market. She don't know how to sell collars. She needs to put on collars. Buy a put, sell a call. Put that collar on. Protect your assets. Don't force to pay taxes on gains. Let's see. From there, let's see, where were we at? We were over in currencies now. We were in metals. That's it. So, there's rice. Yeah, I sent that out this morning, Robin, to Butler. I thought it would be interesting for him to see rice, See, there it is. There's the silver. Is that silver? No, that's copper. Okay, so they're putting the pressure onto the copper, as usual. And now they're flirting with the weekly. It's just underneath the weekly sell. But yeah, Janos, they have simple minds. They like those round numbers. It's easier to live with. Yeah, well, most adults do. Don't ever consider the American the American system in many ways is run. They're not all Bass Brothers. Let's put it that way. I have stock that I bought from the Bass Brothers at $3 a share, and it's trading at $200 a share now. So the Bass Brothers are sharp, but a lot of those guys, no tax on reinvested profits. That's nice. That's the way it should be. Taxes are a crime to begin with. On Tax Authority, just ask quarterly reports and taxes total profit. I mean, taxes don't work. I mean, they just don't. Unfortunately. It would be great if they did. If they did, then we would know it, and everybody would want taxes. But they don't work. All right, from the silver market, we went to copper. Let's put copper in there. There's copper. Pressure's on there. And platinum had gone into the weekly sell last week or 2 weeks ago now. Let's see where platinum is. We'll give it to you again towards the end of the week unless someone asks, but let's just take a look at platinum. Platinum right there. There's the July platinum contract. Yeah, so it went into the weekly sell last week. From there, that's Friday. Close of 971, and today it's trading at low of 932. So it dropped $39. $39 drop today. And it's been in a sell for a couple days. And I have to check that out. Something's wrong there. I have to check that price. The other chart is not showing that. Let's see now. Over there's the stock market barely underneath the 38. What else can we look at? Oh, yeah, we didn't let's look at energies. There's crude oil. There's Brent right there. I'm going to put Brent up there. Brent is seeing a little weakness too, just the way the West Texas is doing, right there. Just a little weakness. And you see it's trying to play into the sell. Let's look at the back month, October contract. Right there. Same situation. Oh no, that's right. That went into a sell last week on the daily, but it's still in the weekly buy. But it did go into the daily sell. So the back month is pressing down a little bit more. From there, let's take a look at nat gas. There's natural gas kind of sideways, pushed into a sell there, but it hasn't really gone anywhere. Still in that weekly buy since January. We've been in a weekly buy since the $3.50, $3.80 area, something like that. 398, 391, 389, 382, something like that. Say, let's round it out and call it $4. So it's been in a weekly buy since $4. The high last week was $9.60, so it's doubled in price. And it's still hanging out underneath the $9 area. Let's take a look at it on European natural gas. We saw it underneath the 27, so that was really good. Let's hope that it's underneath the 27 still. Not that. There it is. It was underneath 27. It was in 26 and change. Darn. All right, well, at least it's still down a little bit. You see the pressure on it there. Nat Gas is trying to get some legs, I guess you could say, on some level or another. Let's see, no taxation reinvested. That was a big reform, but I go off topic. Nah, it's you know what? That's not off topic because the idea is to make money, all right? And if you don't trade correctly to making money, then you get your head handed to you. You know what I mean? So, in other words, taxes are part of making money. I mean, it doesn't matter if you make it by buying something or shorting something. If the taxes take it away, then you've done something wrong. You need to use like derivatives or something like that to adjust your underlying assets and pay, smaller taxation. The difference. You know what? We're past the point here. But do you know that Warren Buffett is invested in insurance companies heavily? And they have a lower tax rate compared to other businesses in America. So that's how that plays out. That's exactly how that plays out. That's why he gets a better return a lot of times, is that it's a lower tax rate on insurance companies. And he can pass the insurance further out. Anyway, traders, we're done. This is Doc from North America. The U.S. market, it looks like it's opening down at 650 points on the Dow. Yeah, that's cool. That's exactly cool, Giannis. That's taxes and politics is all part of the marketplace. Diversification among all regions and all. Yeah, exactly. I agree with you totally. All right, this is Doc from North America. We will catch you on the flip side tomorrow, same time, same channel. Ta-ta for now. Happy trails to you until we meet again. Happy trails to you, to all our Dukascopy friends. Later, traders.